This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe. So, we're going to talk about the market today. Came down and hit some pretty key levels, and we've gotten a really good reaction. Let's just see if it's good enough. I want to go through some of these market conditions because the shifts are taking place a little bit quicker than normal, but I think it's pretty important to stay on top of it. So we'll go through that. Just so you know, when I get into the technical analysis side, going through the trends, if you want to learn more about some of these techniques, I would start with the book. It's at rabilstockresearch.com/book. Also, if you enjoy this content, please hit that like button and also subscribe. All right, let's start out with the sentiment numbers, which continue to kind of move more bullishly at this point. We're up to 42%. More bulls than bears. I've used the Investors Intelligence sentiment number. I've used it for a very long time. I get questions about this a lot. I find it to be useful for me because I'm very comfortable with it. Find whatever sentiment number you can get on a regular basis and update and use for yourself. But I can tell you that when we get to 40 or higher, 40% or higher, it's not a trigger. It's a condition. All right. The condition means there's higher risk right now. There's too much bullishness in place. And so I have that marked as a negative right now. Now I could have kept this overbought. It's at 65%, the RSI 5. It is showing a little bit of divergence still. I could have kept it on the negative side, but I moved it to neutral. But for all intents and purposes, it's operating off of a divergence right now. We just haven't had any follow through to really click that in. And then if we look at the volatility, both the weekly and the daily are back to negative. They're both rising. I'm going to go into that in just a second. And then the trends did not change. We've got monthly, weekly, daily trends all positive. And the momentum, I have not changed either. We've got monthly and daily both positive, and the weekly is neutral. Now the daily, if you had moved that to neutral, I wouldn't have a problem with it. It's kind of borderline right now, but I decided not to change it quite yet. All right, let's go ahead and start looking at some of these charts. So one of the things that just, we've got to be conscious of is what's taking place on the weekly volatility. We've got rising volatility, and when this moving average is rising, that means that the trend of the size of these bars is growing. All right. That's pretty important because when that is happening, historically speaking, if you look at it over time, you can go back and look at this, a 20 ATR with an 18 MA wrapped around it. When this line is rising, there's higher risk of corrective action. Just like when this line is declining, there's more of an upward bias. All right. So we've got to be aware of this. And just kind of keep an eye on it. Now, we have made a higher high here. This has not made a higher high. Maybe this wants to turn down, but we haven't really seen it quite yet. Until that happens, I think you've got to stay on guard a little bit and be a little bit more selective, and really kind of avoid patterns that look like the S&P chart, right? I've been focusing in, and I've talked about it on this channel for a while now, for probably about a month or two. We're looking at the Russell 2000 because the pattern on that is a nice kind of basing pattern. All right. And it's breaking out, and it did hold the 2300 level on the pullback. So it's still hanging in there. All right. It's not the kind of strength we like to see, but it is, it's good enough. The other thing that I'll say is that the daily volatility has started to rise a little bit. Now, this can jump around a little bit more quickly. If this starts to climb and we don't have a lot of volatility, this will drop pretty quick. All right. That doesn't happen really on the weekly. It takes a little bit more time to develop that. And you can just see the size of these bars here versus the size of the bars here. It's pretty, it's pretty blatant. You can see that the volatility has grown. And when that happens, there's just more risk out there. All right, let's switch over to the different trends. And actually, before I get into the S&P, let's just take a quick look at the IWM, because I want to point this out. When we look at a chart like this, and I tell guys that I'm trying to train, guys that are really new at a lot of the people that are taking my courses and stuff have been in the market for a while, but I've had other people I've coached one-on-one, and they're really new. And I tell them, look, we're trying to find smiles, right? You avoid the frowns and you buy the smile, right? Well, this is the kind of pattern I would be more interested in than the S&P. Now, it doesn't mean it's going to work. I'm just saying if the market wants to keep going from here, I think this is the one that gets to take advantage of it. Now, it's possible it could climb and the market could do well and the S&P would keep outperforming. That's probably going to be because the Mag 7 don't break down. And it's possible that happens. But I'm personally of the opinion, based on all the breakouts I'm seeing in some of these smaller cap stocks, that if the market goes and starts to kick forward, you're gonna be better served playing some of those stocks. All right, look at the difference. You see how much this has already moved? And we're coming up on a new calendar year. We don't have real good momentum conditions in place on this weekly chart. Now, the MACD, anyone who watched my show for stock charts this week, I talked about this specific chart and how it kind of reminds me of what's taking place, or what was taking place in late 2021 before the bear market. Now, I'm not saying we're going into a bear market, but I think we could go into kind of maybe a rough period as we start the new year. We're going to need some confirmation. The ADX is not confirming, just like the ADX was not confirming here. The volatility was going up here, just like it's going up here. So there are some consistencies in terms of what was taking place there. The difference is we don't have any confirming evidence. And until we do, you have to keep an upward bias. And we're going to keep looking for stocks to play. It's not like my subscribers have missed the bull market. I'm not sitting here looking at this and saying we can't play. I'm saying we want to play. We want to play stocks that look good, but you got to be very careful if in fact we do break this moving average, because I think that would be much higher risk. And a lot of the stocks you're playing are going to have a very tough time if that takes place. All right. We've got this monthly chart that's somewhat extended. Again, I'm leaning towards, with this being another week or so left in the month, and then we have one more month after that, and we have a holiday later this month, and then we have a couple holidays in December. It's just not that many trading. We're talking about 22 trading days left of the year, and 22 trading days, and there's some of those are holidays that are in between holidays. So I think it's just hard to expect a big drop to happen right now. All right. We got to stay on guard. And one of the things that's taken place here is that we've popped to a new high, but we didn't really see the ADX. Like the ADX here was pretty decent, but now we've gone to a new high and we don't have the confirmation in the ADX. And so we got to be careful here. Now we're coming back. We've filled the gap. We're coming back to this whole high. It'll be very telling how we react at this 600 area, whether we start to see some fresh new selling based on the fact that we don't have confirmation in MACD yet. MACD has not crossed back above. So how this reacts over the next day or two, I think will tell us a lot. If we decide to do an ABC, then we could have a situation where we correct and then maybe get a little Santa Claus rally, and then we close near the highs of the year, but we're starting to show some signs of weakness. All right, so I would say that's kind of what we're should be watching. Now, we had pretty strong momentum, but it wasn't as strong as the up move, but enough to have us a little bit of concern. But if you notice right now, this looks like a retracement rally. We don't have a lot of strength in this rally so far. So I think we have to be conscious if the hourly re-breaks quickly. If we don't get any surge from here and we fail at this high and we fill the gap and then we start to turn down, then I think I would feel a little bit more uncomfortable that maybe this wants to pull back a little deeper. And again, it might not turn into a full-fledged sell-off until next year, but it could have the makings of volatility, low momentum confirmation, no momentum confirmation on the weekly and the daily, right? We're just missing the price action, and it really needs to take place on the weekly to confirm something significant. All right, so that's the update for the week. Let me know if you have any questions.